Good afternoon, everyone, and welcome to another edition of Trending Thursday here on YouTube. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Always my pleasure to be here. Glad that you're all here. I see there's a lot of people in the room today. You guys are already talking amongst yourselves. We're going to learn about what's going on in the market. We're going to see what stocks are moving the market. For those of you who are brand new, don't forget to comment, like, and subscribe. Bigger thing of all, I want you to comment, and I want you to subscribe. Got a lot to cover. Again, for the new people, what is Trending Thursday all about? We look at news, we look at stocks that are making the news. We use the power of the VectorVest software to analyze those stocks. As we get started, we always start off with what's going on in the market, right? So we do a nice little brief overview of what's going on in the market, and we're going to start with that now. I'm going to open up the home page, and from the home page, a lot of information needs to be gleaned right from there. The home page is your gateway into the software, and the home page is going to provide for you a lot of different great information about what's truly going on in the market. Not what the pundits say, not what the talking heads say, but what's really going on in the market, because we have some indicators that take a lot of the guesswork out of what's going on. So on the home page, we do have at the top our daily traffic light into the market, just like the red, the yellow, and the green that you would see on a traffic light. Right now, the color guard, as of right now, and we are using real-time data, so we're going to watch this data tick real-time throughout the day. As of right now, our market timing gauge is one tick into the red. The color guard is mildly bearish, and we give guidance. VectorVest does not advocate buying any stocks at this time. That's straightforward. So whether you're a subscriber or not, especially if you're not a subscriber, we're telling you it's not the right time to buy stocks. Down below, we have the color guard. This is our 6-day snapshot of what's going on in the market. And the color guard tracks 3 of our market timing indicators. Price, which is the price movement of our VectorVest composite. That's an indexed arithmetic average of all of the stocks that we track. And currently, that indicator is tracking 8,248 stocks in one ticker symbol. We track its price on both the day-over-day and week-over-week basis, and we assign tiles on a daily basis. RT, which stands for relative timing. This indicator is cast on a scale between 0 and 2, and it looks at the underlying trend of the market. Below the value of 1, unfavorable, and the market is in a downtrend. The lower below 1 it goes, the faster in a downtrend it is. The next indicator, the BSR, or buy to sell ratio. This indicator looks at the overall health of the market, and I think we're the only people in this industry that has a true indicator that looks at the health of the market. The buy to sell ratio looks at the amount of buys recommendations we have in the system compared to the amount of sell recommendations we have in the system, and it lets us know currently almost 4,000 sell recommendations, almost 500 buy recommendations. Well, the sell recommendations outweigh the buys by a lot. So the market is definitely showing signs of weakness. When the market is moving higher, more stocks become buy recommendations as the market trends higher. But as it falls, more sells take over and the market is showing signs of weakness. So those are the 3 indicators that we have in our color guard, and we track their indicators on both the day-over-day and week-over-week basis to assign the tiles the colors of the tiles. Noticing that still more red tiles in our 6-day look-back period, the market is showing more signs of weakness. Red lights, when you get to a red light, what do? You stop. In this case, looking at the color guard, you stop buying stocks long, and we've been in that scenario for a minute. All right, so looking at the color guard, looking at the market timing gauge, all of those things, let's go look at the indices. Everything is down. The Dow is down another almost 1,000 points for the day. The NASDAQ is down almost 3%. The S&P down over 3%. And that VectorVest composite that tracks the movement of 8,200 stocks is down almost over 2.5%. The market is experiencing another down day. But let's truly see what's going on in the market, and we're going to get into our first story. Now, the first story, we're always going to talk about what's going on. This one? Yep. Always going to talk about what's going on now. Well, the economy is still overall doing well, right? How about over the last week, March 4th, private payrolls up 183,000 as hiring shows no signs of the coronavirus. So take and separate aside the market the economy. They are two different things. Now, the market could affect the economy, but I want you to know that when you're looking at the economy, there's three things that move markets globally: earnings, interest, and inflation. All right, now step the economy to the side. Earnings, interest, and inflation. Earnings are good, the market's bullish. Inflation and interest are the bad guys, and we want them to be low. Well, guess what? Interest is still low. It's even getting lower all over again, and inflation is right in line with the target that the Fed has. So overall, the economy is doing good, but the coronavirus is slowly but surely affecting the economy. So jobs are good. And then let's go into what the Fed, which is now the market, look at what's going on in the economy. What the Fed did, the Fed dropped the interest rate another 0.5 point to help bolster the economy. The Fed's job is to look at jobs and to look at inflation. And when they drop the interest rate, that helps to spur up an economy. Now, the economy needed some spurring because of the influx of the coronavirus on what's going on in the economy. So the Fed said, all right, we're going to help you guys out a little bit. We're going to take the interest rate down another 0.5 point. That helped for about an hour when they did it. And after that, the market said, whatever, coronavirus is bigger than just the Fed dropping the interest rates. Guess what? Now this is still on the Fed's radar to probably think about dropping the interest rate again to still keep the market buoyed or the economy buoyed as the coronavirus is weighing in. So keeping that in mind, there is a difference between the economy and the market, but they can affect one another. But I want you to understand what three things actually move markets globally. Earnings are still up. They may be coming down, but earnings are still positive overall. And you know something? Some companies like Apple and Microsoft are already out there guiding lower going into the next quarter. So now, once it affects earnings, once the coronavirus affects earnings, then that's going to affect the market. But the economy and the market are two separate things. Even though I think we get them all garbled up together into one thing, they are not. Understand that. So we did turn around. The Fed did drop the interest rates by 0.5% or a 0.5 point. Let's go take a look at our watch list of stocks for today. And we always have in our watch list, where is it at? We always have in our watch list the two indicators that we use for tracking the market. Let's go YouTube trending Thursday. What's today's date? The 3/5. There we go. Here's our stocks that we're going to cover today. And the two of them that we're going to look for as far as the market is concerned is going to be the VVC. Where's that at? The VVC and the spiders. For those of you who are not VectorVest subscribers, the spiders or the S&P 500 is a way to go. So as we look at it, man, both of them are holds. The VectorVest composite is fairly valued right now. When you look at the spiders or an ETF, the value and the price will always be the same. When we're looking at what's going on with the VectorVest composite, RV on the market, below 1. So we don't have good upside potential. Safety on the market, relative safety below 1. So the market is not in a safe spot right now. Notice that on the ETF though, RV and RS are both at 1. That's how we track ETFs. On the VectorVest composite, the timing, relative timing on the market, still below the value of 1, whereas on the spiders, it's just a little bit below 1, but nonetheless, both of them are in a downtrend right now. And the earnings growth rate on the market or the VectorVest composite still is sitting at 4%. We do not calculate the earnings growth rate for the spiders. All right, let's take a look at these two on a graph. Folks, this is the market. Whether you are a subscriber looking at the VectorVest composite or whether you are a non-subscriber looking at the spiders, here's where the influx of the coronavirus kicked in, market fell. If you are a VectorVest subscriber, we protected you prior to this fall. You guys have already been watching the daily color guard reports and the strategies of the week that talked about how as a VectorVest subscriber, you were protected. If you're not a subscriber, I would suggest that you think about taking a trial where you can get access to this information on how we saved our subscribers coming off of this top. Today's information, big down day. Notice that coming off of Friday's low, up, down, up, down. Let me zoom in a little bit. Up day, down day, up day, down day. You know what this is called? This is called volatility. The market cannot establish one direction or another which way it really wants to go, but overall it is down. We do have a level of support, which was Friday's big close to the downside, and now coming up off of that, the market is having a hard time getting out of its own way, and the volatility, the fear of coronavirus is still affecting the market as a whole. Let's move over to the S&P 500, same kind of thing. All right, down day, up day, down day, up day, down day, back and forth, the epitome of volatility. As a volatile market, what do? If I'm a little bit more conservative or a little bit more prudent, I'm sitting on the sidelines waiting. If I'm a little bit more aggressive, I'm licking my chops, because on the up days, I'm taking advantage of the up days. On the down days, I'm taking advantage of the down days. If you don't fall within that category of investor, you're waiting for the market to come to you. Don't try to catch the falling knife. Don't try to guess at what the market is going to do. Let the market come to you. And as a VectorVest subscriber or as a reader of graphs of the market, you are understanding what's going on. Don't let the talking heads talk you into something that you don't need to do. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.